Good morning, ladies and gentlemen. Welcome to the Flow Show. It's Friday at last, the end of another week, and we're going to be having a big week next week. So probably a good weekend to charge your batteries. Morning, Stel. Morning, Kay.
Morning, mates. Is that your dog?
No, just a random. I haven't had a dog for maybe 20 years now.
Oh wow!
Yeah,
I thought it was a llama at first.
that's been me on about 6 o'clock this evening.
Oh, guys, give me 2 minutes. I'll be right back.
Yeah, no worries, mate. No worries. You okay?
Yeah, all good, man. Ready for the weekend. I'll be having a very short day today. I'm gonna leave right after the Flow Show, so I'm very much looking forward to the weekend.
Yeah, wicked, mate. Mrs. birthday, isn't it?
Yeah, kids and I have organized a few things, so we are leaving around noon.
Yeah,
for the whole weekend.
That time of life where you don't talk about the number, eh?
Exactly. Oh yeah. Oh, my God. Next year, I decided early next year it's mine, and that's going to be my last birthday before I change yet another big figure. So next year I'll celebrate my last birthday, and from then on I'll stick to the same age.
What are you next year, mate? 49?
Yeah, I wish. 59.
59. Oh, the big 6-0 the year after that, then.
Yeah, but I'm not gonna celebrate afterwards.
No. Oh dear. Well, you can qualify for a pension then, can't you? You can start taking it easy, mate. Put your feet up. Get the old pipe.
More scary.
Yeah. Well, one thing's for certain.
Discounts on the bus.
Yeah, exactly. We don't get any younger, do we? Certainly not. How was yesterday? Much going on yesterday, markets? I really haven't.
Well, yeah. The main event, I would say, that was a gradual lower dollar, slow leak. That was kind of the main thing, and then there's a bit of stuff going on in the oils around the Russian price cap, ships being stuck in the Bosphorus Strait. It's about the main stuff. Yeah, basically that. Bank of Canada bid a yo-yo. Oh, was that the day before already? That was the day before already. Yeah, so Canadian dollar a bit up and down as well. Yeah, it's still slow going, but the market tries to trade the slightly weaker dollar right now. I'm not sure. It may be just position adjustments ahead of a big central bank week next, and then into the year end. We can't forget that year end is close, and asset managers, money managers, they will have to do stuff to close their books or make their books look a little bit better. So there's gradually going to be flows out there, which could be qualified as seasonals, I guess. So,
hello, I'm back. Hello.
Yeah.
Hi, mate.
What are you talking about?
I'm just saying.
We're talking about you waxing your surfboard.
It's 20 Celsius today. Unbelievable.
No, it's -4 here. Thank you very much. The frost didn't thaw from yesterday's frost. It was still thick on the ground here, even with the sun out. So yeah, very cold here at the moment. I'll be out poking the pond with a broom later, no doubt. But yeah, this week's looking a bit calm before the storm, as we get the busy week next week of the last central bank rounds of the year, and in the month, in the year, that sort of stuff, and our mini Christmas party. So we'll be doing potentially a quick show next Friday, because we got to get out down the pub for a change. You're more than welcome to join us, Stel. If you fancy getting a flight over.
I am going to be in London 4th to the 9th of February, so mark your calendars. With a family, so we're going to have a full schedule, but I'll find some time to meet up.
Yeah, we'll organise something, mate. Maybe have a bit of a shindig up there, a bit of a lunch, if you can peel yourself away from the family for an hour or 5.
Oh yeah, of course.
Oh, it's in the calendar.
Awesome.
Cool. Right, let's get into some work stuff then. Just not too much going on overnight.
Do we have to?
This morning. Well, we can watch a film. Do you want to watch a film? Put a Christmas film. We'll watch Elf. That's what we'll do next Friday, everybody. We're going to watch Elf.
That's a
at least
nice
an hour.
movie. That's a nice movie.
Yeah. Well, speaking of fantasies, China and COVID. We know they're easing, but there's now worries emerging. Let's call them that. About how this easing may lead to a big jump in infections. The population is very under-vaccinated in terms of general numbers. So now the worries are coming up about if they ease these restrictions, COVID's going to kick off in a big way. Lots of deaths, so on and so forth, and the potential impact from that on activity and growth and the economy and all sorts of stuff. So even when we're getting the easing positivity, it's now being matched with some negativity of what that could entail regarding activity in China. What we have seen is there was a story out last night saying that overall freight shipped from Asia to the US fell 9% year on year in October. That followed a 3% decline in September. That was according to some Tokyo researchers. And the demand in the US ahead of the holiday shopping season is softer than usual. This year, retail sales or stores stockpiled inventories, as we know, during we had all those supply issues and freighters blocked up ports and that sort of thing. But there's general gist of the story also is that there's a changing in patterns between reliance on different countries and different areas brought about by these supply chain issues has led to countries seeking other supply chains. So it could mean we're going to see a big shift in trade around the globe, how it's done, where people are buying and selling from due to those supplies issues that happened before. That could impact trade between China and the US, China and everywhere else. So it's all going to fall into the global growth mix. We're probably going to be getting into that quite hard in 2023. Over in Japan, Kishida still says there's no tax hike for defense spending next year, while others keep saying there will be a tax hike. That I think is going to be a bit of a bum fight to come in Japan. Over in the UK, there'll be no PPI data next week. That was on the cards, I think, alongside CPI data as well next week in the UK. Obviously, the Bank of England next week too, so the data is important, but there'll be no PPI. This is due to problems they had with the last data over a prior quarter. It was all cocked up and messed up and whatever, and they're still trying to iron out the kinks for that, so they're stopping that. Regarding the story we had earlier this week about the UK Treasury looking to reform regulations, one of the areas they're going to reform or look to reform is the short selling regulation. I haven't looked into this too deeply yet to mean exactly what they're going to do. It all looks a bit early days yet in terms of what they're actually going to look at, but moves are being made to ease regulations for the financial services sector. There was a survey, Bank of England survey, quarterly inflation survey. Expectations for the coming year dipped to 4.8% versus 4.9% prior, so a little tiny bit of easing there of inflation expectations from the public. For 1 to 2 years out, the number was 3.4% versus 3.2%, so a little bit of a rise there. 5 years out, it jumped as well to 3.3 from 3.1%. So inflation still looking hot there for the consumer and the public. Over to Sweden, and Riksbank Jensen said we are prepared to do more if need to. So they're going to keep their finger on the trigger, as it was. And as Kay mentioned, we had some Bank of Canada members out. Kozicki said that future rate decisions are to be more data dependent, and that the bank is moving on from how much to raise rates by to whether to raise rates. There was a little bit of, I won't call it confusion, but when those comments came out from the Bank of Canada, it could be interpreted two ways. One, that the next decision they're going to decide to raise rates or not to raise rates. And it's fallen on the the less hawkish side, where the next decision is maybe they will, but they'll be deciding or looking at to decide whether they don't raise at all from now on. So we are potentially at the end of the BOC hike cycle, depending on the data, of course. It said if they are surprised on the upside, they are still prepared to be forceful. Fingers on the triggers. Over to the US, and another survey out by Adobe, who've been doing a lot of this measuring of Cyber Monday sales, Black Friday sales, online sales overall. They're out report saying that online goods prices fell for the last month in November, and they fell at a nearly 2% annual pace in November. This is something Stelios has been talking about a lot, in seeing big dips in inflation coming due to the washout of what's happened this year, that prices will have to do twice as much, if you like, to maintain the levels they're at the moment. But for online shopping, there is some potential relief for the Fed, that they dropped nearly 2% year on year in November. That was the fastest decline since the big drops over COVID. While we're on surveys and polls, a Fed survey was out by Reuters, or a poll by Reuters, saying the Fed will raise by 50 pips next week, according to all 84 economists. So no split there then on the size of the potential hike next week. The possibility or probability of recession in 1 year was at 60%. It rises to 70% in 2 years, so that was up from 63%. 35 of 48 economists said that a US recession will be short and shallow, so a few more looking for something else. And the ECB had a poll out as well, and 51 of 60 economists said that they will raise by 50 basis points next week to 2%. What else have we got? Not a lot out. On the data front yesterday, we had jobless claims. Or let's start with China first. So we had some inflation PPI data out overnight. Inflation pulled back to, as expected, 1.6% from 2.1% prior. PPI came in not as bad, minus 1.3 versus minus 1.4 expected, unchanged over the prior month. I have seen a few headlines now taking the other side of the coin to what we've heard previously about inflation maybe dipping rather than rising, but we've seen China CPI rising for a few months, so I'm not sure it's ready to turn tail just yet, but a little bit softer there overall. The only other data was jobless claims yesterday. Kay, you covered that much. Not much change by the looks of things. The 4-week average still ticking up a little bit.
Well, I mean, really, it didn't have much of an impact, and we were talking about that yesterday. And really, we need to see the initial jobless claims move away from those 200 to 230, 250K. It really will need to rise quite significantly above 250 up to 300, or on the other side dip below 200 and go towards 180, 150 to really have a material impact on the dollar. I think the rest is going to be short algo blips, and it's climbing, but nobody's really I don't see anyone being really nervous about it right here and now. If we start to go above those peaks we saw in where was it, the summer months, July, August, over there somewhere, then perhaps it's going to have an impact, but I'd still qualify it as very small moves. We lost you, Ryan.
Hello, mate. Yeah, got me.
Oh, he's there. He's there.
He's there.
I'm out. Yeah. Yeah, I was going to say we do have US data today, core PPI and PPI numbers there. That obviously coming in ahead of next week's CPI data. So looking for a little bit of a dip there in the core PPI to 5.9% year on year from 6.7. The headline number there also expected to pull back 7.2% versus 8% prior. PPI can be a bit more volatile than CPI, but it all seems volatile at the moment. And then we get the flash Michigan read for the new month. Keep an eye on those inflation expectations. Expected unchanged on the 1 year at 4.9% and unchanged on the 5 year at 3%. So the consumer numbers and those inflation numbers before the Fed next week could be a bit important, a bit of a market mover, as we haven't got much else to get our teeth into. Finally, as Kay mentioned earlier, Turkey's still messing around with these oil tankers. I don't know if you explained yesterday, Kay, about what's going on over there. Basically, Turkey's asking for a letter, almost a letter of indemnification on insurance that would say that vessels are insured even if they become subject to price cap sanctions or EU sanctions. So I don't know what they're doing over there. I don't know if this is part of some deal with Russia to halt things up, maybe try and push the price up, but it's becoming a bit of a mess over there. Tankers are backing up. So we just need to keep an eye on that in case it starts impacting oil. So pretty quick one. Any of you guys got any stories, headlines, notes you want to throw in the mix?
No, not really. No is the answer. No.
No, I mean, the rest is mostly what I've been reading, at least opinion pieces about things and why oil is coming off and yeah, talking about the price caps and Russian oil still flowing towards the east, but anyway at discounted prices, and it's really. I think the market is really now waiting for what's going to happen. As you say, this afternoon, it starts with the first little salvo of data, and then next week the bigger ones into the central banks. And I haven't seen really much news coming out. Now, of course, if you look at China, to come back just 1 second on China, they are going to announce less cases, right? But that's just because they are going to abandon all the mass tests, and they're probably going to announce lower cases than they probably are. So that's one to keep an eye on, and that's where I think the market as well is reluctant to just go and buy the Chinese yuan, and that's why we are sticking around here in this still sub 7 though, but in this not really making any headway lower in the dollar China either.
Yeah, I was looking at that this morning, and it's probably been the quietest it's been for quite some weeks, maybe even months. Really not doing much at all at the moment. I did have half a thought maybe they're doing a bit of smoothing just while they do this reopening stuff and easing stuff, just to.
We lost you again, Ryan.
Yeah, I thought it was me, but we did lose.
Hello, hello.
Here you are. Here you are.
Now you're back.
Stop pressing the mute button.
Yeah, and pay your bills.
No, I don't know. Something was resetting there.
Pay your bills.
Yeah, I was saying that $1's not really going anywhere at the moment. Probably the calmest it's been for quite some time. I don't know if that's some official smoothing, maybe while this reopening news is coming out, or just waiting for the Fed like everyone else at the moment. A quiet week.
So. Yeah, I think so. And PBOC is also not showing any signs with their fixings, so they're very, very neutral. The fixings have come lower because the dollar is lower across the board, but and dollar China for them is probably a welcome move back to below 7 or around 7, because then they can continue to inject liquidities if they want, and with less risk of dollar China really exploding higher. So I think they're all very happy, and players also perhaps a bit reluctant to really go and buy Chinese yuan. But for the time being, it's a bit of a wait and see here.
Yeah, definitely. I'll make Charlie's up. When will liquidity pick up again in the new year? Pretty much from the off, I'd expect. January the 3rd is when we come back. New Year's Day is January the 2nd, so markets will be shut there, but we're all back open January the 3rd, Tuesday. So that's when things will really pick up. They'll probably die or markets will die probably from the 20th. After we get through next week, then things will really start to calm down. There is a bit of a risk around the Bank of Japan if something comes out. It may be in a low liquidity time, so could see some jumpy moves there if there's anything of note to come from that. But that week will probably be last minute finishing off for the end of the year, New Year, and Christmas, that sort of thing. But obviously markets will be open through the period and that little gap between Christmas and New Year's. So again, low liquidity conditions can be very quiet. But if there are any big headlines, geopolitical news or anything like that, we could get some big moves. But liquidity will really start to return 3rd of January. Who was another question now? Nikita, does the rollover affect FX? What rollover? Are you talking futures rollovers? What rollovers are you talking about? Because there is in retail FX, there is the old end of day roll. So let us know what you futures. I very rarely personally see. Oh, have I gone again? Have you lost me again?
No,
hello,
you're
hello?
here. You're here. You're here.
Yeah. Cool. Something keeps refreshing in the background. Yeah, if you're talking futures, not really. The futures market compared to the spot market is obviously much smaller, and there's not usually an effect in futures that we see in spot. So I don't expect to see much of anything in the roll. But end of the year, people doing all sorts of things. So who knows what comes from that. You guys, you monitor anything about futures roll over FX?
I rarely trade futures on FX, so I don't know is the answer.
Right, thinking. No. Cool.
You got all those OPEX things coming in and out, and they can have an effect, but usually they have like an effect to create some wobbles, but rarely really lasting effects, right? The turn of the year globally, that could be a different story, because as I said earlier, if money managers need to arrange or hedge or neutralize their books versus outstandings for the year end, that could create some serious flows. And in that respect, we could still see moves until the last day of the month, until the last day of the year, really. So yeah, and concerning the liquidity, liquidity will be less, but it doesn't mean that there aren't going to be moves just because of those flows. I recall end of years where the last part of December was one of our biggest parts of the year, actually, when I was still in banks. So we have to take it into account that there may be quite a few flows around, especially instruments having moved quite a bit over the year. So we can expect some hedging needs. So yeah, keep alert, I would say.
Yeah, definitely. For me, trading wise, I've not been doing a lot this week. A few scalps here and there, dollar CAD, euro sterling, a few bits and bobs, just managing other positions. Really is all about next week, gearing up for that. And just on that front, if you haven't seen it already, Stellis has done a preview. I'll be doing a preview today, finishing off a preview today on the Fed next week. I'll pop that link in the chat room there. I'm going to assume it's a very good preview. No doubt it is. I haven't read it myself yet because I'm going to be right in mind, so I don't want to have any undue influences. I don't want to copy Stell's work.
It's like when you have a big artist. I'm the one before, right? The one who warms up the crowd, and you're the main event.
So, support act.
Support act. That's the word I was looking for. Yes.
No, you're not, mate. No, you're not. You play yourself down there. But yeah, I'll pop that in the chat there, so you can check that out as well. If you can post that in the link flow room, can't copy it here. I think, is it already in the chat room? Have you dropped it in the chat room, Stel?
I did yesterday, and it's on the. We tweeted about it and everything.
Yeah. So you can definitely find it, Brian. Yeah. Go looking, mate. Go looking.
You put it here, right? You put it here on the chat here. There you go.
Yeah, I put it in the chat. So yeah,
there you go.
So yeah, it's everywhere. It will be everywhere.
Can't copy it here. I'll put it on the.
And I've put it in the news and research room, Brian.
Okay, great.
Cool.
Thank you.
So you can get it now. Yeah, so I'm pretty much looking to get set up for next week. I'm still of the same basis. I'm still dollar bearish. Still want to be short some dollar yen, but I was short a little bit from last week. I'm out of that now. I want to be getting short again because I still think that the Fed is potentially coming to the top of what they're going to be doing with rates. I've had that view for quite some time now, hence why I've been long Aussie dollar. So I'm going to be looking at any decent rallies now in dollar yen. I'm going to be looking to scale in to run into the Fed. Maybe the Fed will give me a few better entries to get into. Level wise, I'm probably being a bit optimistic, thinking we're going to get something in the 140s. So I may be looking up towards this sort of 139 area, maybe if it gets as high as towards that 140 area. But I think unless there's something going on in markets other than what we know from the fundamentals, I think it's going to be a bit of a tough ask to see anything up into the 140s from here. So that's that side I'm going to be looking at for dollar yen. Price action in the main is it's so. We're just sort of edging down slowly over the last few days, but it doesn't look like we're going to be having a look at these lows again before the FOMC, unless we get something from the data today or some other news. So potentially we're looking probably around about 135.5, 135.60 up towards, the mid to high 137s is probably our range that we're going to sit in for now from here. As I was mentioning, $1, still keeping an eye on that bit of sideways action. Really, we need to see what's going to happen between this 7 level and my main support down here, 6.91. If we break that, just having a look at the wider chart, if we break that, then we are potentially heading towards a move down here, which was a big break point down at the 50 fib, which has been a natural support and resistance area when we had the break through 680. That was the big resistance as well. So a move down there, that would maybe change things entirely for this pair. If it holds there, though, it will keep this rally in play, but it could be a big decision point for the pair there. That's potentially where I'll be looking for longs, depending on the driver down there. Is it the Fed? Is it China? Whatever's going on down there. Aussie dollar. I was a bit worried the other day when it broke this short term. Let's go into that one. When we had this short term trend break, just of this recent move here, I thought it was maybe going to start heading lower, but we held the zone down here, 65, 80 zone. That's been a player for quite some time. It's keeping the rally alive for now. We had a move up to 68. That's shown up as resistance again, as it often tends to do these levels. Once we've had a test, it shows up once more. You can see that level goes all the way through back to mid part of November. So for those who like to practice the witchcraft, maybe a potential head and shoulders setting up there. I'll let others decide on that one. But for me, I'm more encouraged now we've stayed above this area and this trend line. I'll see if it starts holding again. Still looking for a decent break and hold above 68. Haven't had that yet, and if we get that, then that's going to be the key to push higher. Conversely, if we get below this 66, 65 area, we have the potential to head all the way back down, low 66s, maybe even worse, all the way down there. So lots to come out from this pair. Euro sterling, seems everyone and his mate is long this one at the moment. Okay, you still long a bit of this?
Yeah, well, I'm trading it around. It's been okay, but now we don't even have enough of a range to trade it around. It's completely stuck. So waiting.
Yeah, we've had a couple of attempts up in this 45, 50 area. Again, another one of those zones that I like to look at where it's not necessarily one number, but it's an area that's had a lot of support and resistance issues going with it. So you need to see a clearance of the whole thing before you can decide to think that you're getting a break. You know, even if we get a move up, you know, above this line here, it doesn't mean we're off to the races up to 87 at all. It's got to chew through a lot of traffic. And on the flip side, at the moment, 85, 90, 86 is looking to be the short-term support at the moment. But the bigger support down towards that 85, 50, 60, 70 area as well. So as Kay says, a bit of a stuck in range one. This one, I am small long a little bit. I did take some off when we had some of these moves earlier. And we'll see what happens from this point. Kay, do you want to have a little look around the grounds?
Yeah, it's going to be a quick one today. I'm just going to show a few that I'm looking at. On the euro sterling, just last word is that yeah, I'm in the same position, a little long, but as you know, I'm trading it around. So whenever it comes below 86, I'm trying to pick some up, and for as long as we hold around this 84, 85, 40, 50 zone, and then in the 86s, just let some go and see where we end up in the end. Going to try for the time being. I'm trying to keep some longs going, but I must say that the longer time goes and the less we can hold those rallies, I might get a little bit nervous. But on the other hand, just to finish on that, on the other hand, we've seen those plans from Hunt to try and make the city more competitive. Oh,
yeah, Kay, I'm not sure what screen you didn't see your charts there.
You didn't?
No.
Okay, hold on. Yeah. What did you see? Because I was on oil.
Let's have a look. Are we
do it
getting them
again.
now? Yeah, there we go. Got them
there
now.
you go.
Okay, lovely. Okay, yeah. So on the other side, despite Hunt coming up with his city plans to make them more competitive again, it doesn't move either. So and despite some positives that we had perhaps on the Northern Ireland protocol, it doesn't really drop too far either. So for the time being, just keep it as it is. Yeah, a quick look on this gold. This morning again, we had another dip down to perhaps do it on a little smaller time frame. We had another dip here. Again, under this support line, 73, 72.90. For the time being, we're holding below. And if you go on to the dailies, I showed that yesterday. If we are to drop further, I'm seeing this big equilibrium zone between 62 and 68 bucks, call it. It could be reached despite, well, we have to take into account that the Americans are going to be sitting on the bid, right, very soon for the SPR. So perhaps we can't reach it there, but in the meantime, it's something that we have to look at what the exact price action is, and for the time being, we are staying below this 73, 74 bucks. That's going to be one that I'm monitoring, which brings me over to the Canadian dollar. Yesterday, I picked it up around here, around this level. As the people in the room know, I'm monitoring this broken trend line here for a final cut if it breaks below there. But already this level seemed quite interesting, which it did. In the meantime, as I usually do, that's my trading style. I let some go pretty quickly, and then around the figure, and then today again in this 35 area. It will depend a lot on what's happening in the oils, I think, from now, and on the rest of the dollars, of course. But yeah, I think it's not too bad to give it a try. Of course, this 136.85 figure needs to be really respected. And that would be kind of my target for this move. It may just be enough if we get up there. I'm not looking for a massive move either. In the meantime, risk has been reduced to virtually zero on that one. I'll if I get it back down here, I may give it another go and try it again. Just call long for now. The other one. And just a quickie on the Aussie, we capped again at 68, the figure there overnight. Looks like there is decent interest up there. So now we are back on, or we went back to the 67.5. This is our tightest zone, in my opinion. 7.5, 8, and then below. Yeah, Brian showed you already what to watch there. But I'm keeping an eye on this one because we've broken above and then we are retesting it. Could be interesting if ever the dollar picks up a little bit of steam, perhaps. On yeah, the other one, Aussie Kiwi so far going according to plan. But as I said, we are going to need a move back above 106.60 to even get more neutral, in my opinion. And then the big one is going to be 108.50.80. But for now, it held the support zone, and that's a bit of a positive. So again, if we start to come back off, watch this 105.60, 105.30 zone in the Aussie Kiwi, and make sure not to let it run too far if you try to catch knives. I've already lightened up just a tiny bit, but I'm planning to lighten up more if it goes up here, just trading the levels on this one. But the base idea is that the RBA RBNZ diversion has sort of ran its course for now. Anything else I wanted to look at? Yeah, yesterday I've seen the Mexican CPI data come out, and they came off. And we've had this little triangle here, which has broken up today. I'm still a little cautious on this one. I'm not going to dive into it right now because I will wait until the Fed and the Banxico next week, because there's this sneaky feeling saying that Banxico may also start to slow down, which they already have hinted at the one before last meeting or in between meetings. So I'm very cautious on this one. It may retest the highs, and why not retest somewhere into the 21s ultimately. So I'm going to keep monitoring it, but for the time being, not too much interest to dive into that one. Stel, do you want to comment on the metals, or is it really up and down and in the middle, and they're holding relatively well, right?
Well, I've said yesterday, I think following months of underperformance, they are now outperforming. But I wouldn't get too excited about it. You know me, I am long a little bit. I want to add a lot more. I'm not going to get too excited ahead of the inflation and the Fed next week. We are performing a lot better than we were weeks and months ago. I'll give them that, but we don't have the breakout yet. Breakout is, we break above the 23.50 level. I think then we're off to the races, but the Fed has to not be hawkish. So I still think there is another little pullback coming before we can load up more.
Yeah, okay. Interesting is, if you look at the bigger picture, that we were talking, and yesterday you were talking about that with Dickie Matthews as well, is that like metals are an inflation trade, but it can take a longer to develop. Now, the funny thing is that, of course, it has to do with yields and everything. But the funny thing is that now inflation seems to slow. I'm not saying that it's all done. We can't say that. Now that inflation seems to start to slow, the metals have actually picked up, which is kind of a little bit counterintuitive, right?
There is always a lag. If you go back in time, every time there's inflation spiking, the first reaction is higher dollar, higher yields, and the immediate reaction to that is to sell metals. It doesn't make any sense to me, because the more inflation you have, the less purchasing power the dollar has, the more value finite assets should have. End of story, unless obviously the supply-demand picture changes. But there's no change in the supply and demand of metals. If anything, as the years and decades go by, the easy mining is gone, and then you're left with a difficult one, right? So that's always the reaction. And if you go back, I did it at some point, and I looked at inflation versus metals, and there's always a lag. So I think that's what we're seeing now. And as we're going to see inflation drop, by the way, Norway CPI, you saw that earlier, right? Dropping from 7.5 to 6.5, a whole percentage point year on year. So as inflation subsides, then yields are going to have less pressure. The dollar is going to have downward pressure, and then metals are going to start going. Yeah. So we need patience with that. It doesn't make too much sense for the immediate reaction that we see because of inflation, because these are an inflation hedge. Silver less so, because there's the industrial demand. So if you have economic downturn, there's a downward pressure on that. But gold is an inflation hedge. Historically, it's been. So short term, I don't care what happens short term. If you're looking to invest in these things as an inflation hedge, your horizon is not a month or 2 or 3 or 6. It's more, right?
Yeah, absolutely. Okay, thanks for that, Stel. So in the meantime, gold, we are hesitating just above 1800. We're trading 1794 right now. Perhaps just respect that range that we are in for now, and then wait for next week what the central banks are telling us. If ever it pushes through, we are going to have this 18.25-35 zone, which is again going to be important in my opinion. Already, of course, the break and hold above 18 will be looked as positive upon by most players, but I would still pay close attention to this 18.25-35 in gold. Silver, yeah, we're in it. I'm also in it long term, and I actually let some go earlier, which I bought back, and then let them go again. Yeah, this 23, what is it, 35.40, and then low 22s. This is the playground for now, the sandbox with 22.60 somewhere in the middle. Really for today, what else do I have? Yeah, I have this euro sterling, but it's coming off just slightly, but we're talking about 10-15 pips here, right? Dollar yen, I don't really have much to say. Although it is pretty much respecting this 135.75, 65.75 zone. That's the one where the support comes in, and then the 136.85 is where the resistance comes in. And then if that would give way at one stage, talking about low 37s, and this one should be a tough nut to crack now, 137.80, 138 the figure. If we get back down below 135.65, 65.75, sorry, there may be another 3/4 big figures in there before the week is over. I don't really know. I'm not really playing in this one. I'm seeing what the yields are doing, but the yen is a bit living its own life right now, because we are not really trading higher with a 10 BP recovery or more in the US 10s. So there's a bit of other stuff going on, a bit of hedging, a bit of oil as well. I think when the energy comes off, it should be a bit better for Japan. What is it? Kiwi cat. Oh, here we go. Katie. Kiwi cat. Where are we?
Looks like your trend is your friend in that one.
The trend is your friend?
The trend is your friend in Kiwi CAD.
It's only going up, right?
Oh my, that's a big trend. Holy, what the hell? This is only 2 months worth of, wow.
Yeah.
10-20% up in 2 months.
Yeah, and with, like Kay just mentioned, with the BOC looking to maybe stop and the RBNZ keep hiking, perhaps there's only one way for this still.
Yeah, I've seen quite a few people trying to pick the top in that one. But then you have to be really, I'd say, be careful with the oils. If we see another, and I'm not saying that it's going to happen, but if this oil goes into that, what I see as an equilibrium zone or target zone, this could go even further. But yeah, Kiwi is still.
One more thing. Sorry, carry on. I just have a comment to make. Carry on.
Go ahead.
No, I was just going to say, you're right about oil. Also, we have to remember, New Zealand, they export, biggest export is meat
Christmas
and
tree.
Dairy, right? Dairy and meat.
Christmas trees.
Sorry?
Christmas trees.
Yeah. So the RBNZ don't underestimate how much they hate the currency appreciating. So I think they're going to switch a lot sooner than people think, as inflation looks like it's turning, because they really don't want to have they want to keep their currency in a certain range. They always say it on the minutes of the meetings as well. Oh, not always, but they often mention it when the currency appreciates. So just be careful with that. But the trend is your friend for now, absolutely.
Well, we need to go. Where do we need to go? We need to get back for a starter under 86.40, Catherine. If you get back under 86.40, that may be a start of a sign of starting to fail, okay? But in the meantime, I'm not sure if I want to give it a knock on the head. There's going to be a top one day, that's for sure. And keep an eye on oil. If oil finds a base, this could find the top as well. Bank of Canada is really data dependent, so I'm not sure if the Bank of Canada is going to be your biggest driver. I think it's going to be oil moves, perhaps data. There is resistance here if you want to call it that way, but then it might also have to wait for another big figure. Well, I'm not going to get involved, but it's an interesting one. I'd say if we start to get back below 86.40, but because I trust you want to find the top, Catherine. Are you? Tell me. Do you want to find the top? Yeah, of course, like everybody. That's the nature of retail traders, by the way. The retail traders always want to counter trade a move. So that's one of the things that I noticed when I jumped the fence from being an FX spot market maker in banks to the retail world, and that was a real opener. And retail traders just always want to counter trade something. Okay, that's going to be it for me. Ryan, back to you, mate.
Thank you very much. Gavin just noted a comment from TASS saying that Russia and the US are going to meet today in Turkey, saying that the two sides will discuss a set of difficult questions, including visas, embassy staffing levels, and the work of each other's institutions and agencies abroad. Let's have a look. Yeah, apparently this is the highest. Oh no, sorry. Yeah, so that's what's going on there. Headline coming out. Just keep an eye on risk trades there. It's passing around the main wires at the moment. So let's see if that comes to anything of note. We have had this, what do you want to call it, prisoner transfer, the basketball player and someone else, but the Russian official, I think I picked up this morning saying that it's not going to lead to any significant talks on other things. So this is part of the on and off stuff between the US and Russia at the moment.
I'm seeing one question here, and perhaps Stel can jump in there. Paul Shorkey saying that, any thoughts on why 3 months yields are at 4.18% when the Fed is going to raise rates 50 pp's next week? Shouldn't it be higher? Is there a top forming? Just wondering where we are on the rate cycle.
3-month yields are where? 3-month yield is where?
3 months yields are 4.18, he says.
4.18.
Are they? Let me go
well,
back.
we're at 3.75 to 4 now, and they hike 50. Which yield is that? I can't be below Fed funds.
We're trading around 4.25 there.
Still, yeah, that's roughly where we are pricing 150. But then we should be we're pricing a little bit more further out. So
yeah, but as we were talking yesterday about the yeah, I'm seeing it, Paul. Oh, am I on? Am I still sharing? Yeah, or not?
yeah, you are. Yeah, you are.
Yeah, there we are, right? Yeah, we were talking about the yields yesterday, Paul, and there may be, and I'm not saying it is, but there may be some year end as well. People need to hedge. 3 months is really is a hedging tool, right? So there may be some interest there from different money managers, and but if the Fed's really if the Fed is moving 50 bps, this may go back to at least around what, 440, 450, something like that, in my opinion. There's quite a few flows going on. This is a funding market, flow market, hedging market. I've always had personally a little bit of issues myself watching those really short-term yields. They can be a bit confusing for me, at least. Okay, and I think that's maybe it. Shall I give it back to you, Ryan?
Yep, all done. Good stuff. I've not got much more else to share, so we might call that a day for today and a week for the week. As always, thank you very much, everybody, for coming to the Flow Show this week, giving us your support. Obviously, if you like what we're doing, give us a thumbs up on Twitter, and when you see the posts flying around, let's get the word out. That'll be much appreciated. And as always, appreciated are my colleagues Kay and Stel for their input this week.
Thank you, sir. I'd like to thank my agents, my parents. No, I'm kidding.
Speech.
And thank my wife for always making such a nice lunch for me as well.
Thanks, everybody, and get some rest over the weekend.
Yeah, safe trading. Have a great weekend, everybody.
Cheers, everybody. Thank you very much.
Bye-bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.